Okay, so let us start, and I think people will continue joining. First of all, I would like to thank everyone for joining us today for this interesting topic with Dr. Jossan. Dr. Anu is an economist and senior fellow in higher education in the UK. Currently, she works as a program head and assistant professor of international business management at ARIU International University with the University of Derby, and also a professor for banking and financial studies at QFBA, Northumbria, Newcastle University. She has a PhD in economics and master's in business economics and master's in higher education, and she has 15 years plus of banking, IT, management, and academic experience. I'm always happy to work with Dr. Anu. Dr. Anu, she is also a regular supportive of all our investor education programs in QSE. She always speaks in our webinars, and most of the webinars that we conducted with her were very successful, because she always discussing very interesting topics and important topics at the same time. So now I will leave the floor to Dr. Anu, but before doing so, I have just two things to mention. First, please, if you have any questions, just put it in the question and answer Q&A section, and we will answer all your questions. If they are not answered during the discussing the topics today, we will answer it at the end or before we are done with the webinar. The second thing that I would like to announce, that we have at the end of the webinar, as usual, a survey that will not take more than 1 or 2 minutes maximum for you. Just it will pop up once we leave the webinar today. It will pop up. So please, I would highly appreciate it if you can spend this 1 minute answering the questions it's only 5 questions of this survey. Thank you very much, and I will see you again at the question and answer session. And now I will leave the floor to Dr. Anu for the interesting topic of today.
Thank you, Samar. Thank you for giving me this opportunity to talk about investment trends since the pandemic. And I am very, very happy to see many of my students from Stendon, from Northumbria, from Derby. They're also here. It's a great feeling for me. It's a great motivation for me as well. So let me just share the content with you. Give me a moment. Sama, can you see the screen?
Yes, I do. Yeah.
Okay, thank you. So today's topic, which I want to discuss with you, is investment trends since the pandemic. Now, this topic is actually very interesting, especially with the context, because many of the people whom I know has become traders in the equity stock market, started trading in the stock market. They started, saving money, started investing money. And it's very important to know about what were the trends, or what are the trends right now with the pandemic, because there are some interesting insights which we can draw from this happenings which has happened during the pandemic. So first of all, let me give you the topics which I'm going to cover today. So I'm going to talk about the global and regional investments trends since the Q4 2019. That's when the pandemic started in Wuhan, China. And I'm going to also talk about the major events, because when we talk about the pandemic era, we focus only on COVID-19, but there were so many other events which actually happened during this time, which has impacted the investment. Now, the third topic which I'm going to cover is how the investor acted and how they reacted during the pandemic. Now, this is continuing right now, and some of the trends have changed as well, because the economic scenario have a slight change since 2021. And I'm also going to talk about the current corporate and retail investment trends with the outlook to the future. Now, in terms of the major events during the pandemic, so I'm going to start with the yield curve. Okay, so this is something very interesting indicator for those who trade in the market. So if you are a person who is interested to trade in equity stocks or bonds or any of these securities, for example, you need to check at the US Treasury yield curve, because it's an indicator which can give you, it's actually a reliable indicator which can give you an insight about how the economy is moving, how the global economy is moving. So if you look at the trends which has happened here in the US Treasury yield with this green and yellow and the red and the blue lines, you can see here in the beginning of 13th May 2019, the yield curve, that is even before the Wuhan, the pandemic has started, the yield curve on the US Treasury yield securities were inverted. Okay, so it happened for the, during that time in May 2019. So when it gets inverted, it's a sign of recession coming up. Okay, so even before.
Sorry, Dr. Anu, may I interrupt you?
Yeah.
Your picture is stopped. No picture, no video from your side here.
Okay.
Can you want to open your camera for that? Or I mean, the presentation is there, but yes, now the video
I think
is
it
working.
will not. I think it will not open at the same time. It's either the screen or I'm sorry about it.
No, it's okay. It's okay.
Yeah. Okay. So in the beginning of 13th May 2019, so the yield curve of the US Treasury securities got inverted. Okay, and it remained inverted till the 11th October 2019. Now, when it inverted to normal, it was in October 2019, and then in December, the pandemic, the COVID-19 spread has started. So through 2019, like even before the pandemic started, some economists argued that a recession is going to go, okay, in the following years. And some of the economists told that yield curves are no longer reliable recession predictor. But we know, like those people who invest regularly in the global market know that US Treasury bond is one of the biggest indicator, and it can actually show imminent recessions or any types of slowdown. So during 2019, even before all this COVID-19 started, IMF told the world economy is going through a synchronized slowdown. And there were talks as well. We were also feeling that there is some kind of a slow pace in every economy, that there is something that is happening since the Great Recession. And but this was very evident in the consumer market, because global markets started suffering. There was sharp deterioration in the manufacturing activities. And then, even though since our Great Recession in 2009, the global growth has peaked in 2017, all the industrial output started going down. And IMF has told that this is all because of this geopolitical tensions which are having. And we know that at that time, Brexit has happened, China and United States had trade war, and these were the primary reasons for the slowdown. Okay, and while other economists blame that these are something related to liquidity issues between the countries. So this was the situation before the Wuhan, China, the COVID-19 start. And it is usual, okay, that when the yield curve flattens or when it inverts, so investors will start getting panicked. Okay, so they will think that there is economic growth is going to fall. So the curve, which was inverted from May till October 2019, started going normal till 30th January. Okay, so during that time when December, the COVID spread started, it was normal, and then everything was normal. And then that is at the point of time when the first time the WHO declared that the COVID-19 is an emergency concern. And we know that after that, what happened, we went through and we saw many major setbacks in the economy. We saw contractions in many of the areas, and COVID-19 has spread out. And in March 2020, the pandemic was declared. And we can see that is when all these markets, you can see here the S&P 500, you can see the NASDAQ, you can see the FTSE 100, you can see many share markets here. All of them went into a dip on March 20th. That was the day when everything crashed. Okay, so this pandemic, okay, was actually started, and it has caused a big impact. But even more than that, there was contraction started even in 2019 itself. So the IMF and that's International Monetary Fund, they said that the global economy has contracted. During this period, there was 3.1% of contraction in 2020 alone. How it will not happen? There were 6 mandatory lockdowns around the world, okay, till now. And majority of industries were affected with job security issues. They have less spending, production got affected, and even the stock market crash, which we saw as well. So this was the situation. But the very interesting thing about the stock market was, so even though the market crashed on March 20th, it was a short-lived bear market. And what happened in less than a month, in April, the 2020 global stock market re-entered a bull market. You can see after that dip, it started rising like anything, and it never returned to the levels which were, before in March 2020. So it has gone up, and this was, followed with, economic prosperity, or whatever you can see in terms of the stock market and the global growth recovery since the Great Recession. So even though the global unemployment was low and the quality of life was slowly improving, people started trading. And I can still remember that in India, many people, like massive number of millions of people, started trading in the stock market, and same happened with many economies around the world. So this is the situation. So I just want to tell you that it was not started with, the COVID-19. This actually, the trend has started. The recessionary pressures even started even before that. And now we're going to see what are the events that has happened during the COVID-19. When we think about COVID-19, we always think that COVID-19 is the biggest problem, but there were many factors which has happened and which has actually caused this inverted treasury curve. And the first one is the US-China trade war. We know that there were a lot of issues between US and China, especially with the Trump administration. And then there was, global vaccination, and, there was, many companies where around 2,200 companies actually tried for coming up with vaccines, and they were on trials, and there were new lockdowns, at least 6 lockdowns. There were, major supply chain distribution. I will discuss this in detail, how the supply chain was disrupted and how this has been a major cause for many of the problems we are having right now. And then there was US presidential election, there was Capitol event, there was Brexit and the general election, then the first stock market crash in the 33 years, that is on March 16, and then on 20th, and then US Treasury yield curve inversions. Then there is inflation, the record high. There was COP26, climate change in action, and we saw a new boom on Bitcoin, cryptocurrency, a new rise of Bitcoin. And then recently, since 2021 lately, we started seeing geopolitical tensions and issues between Ukraine and Russia, the warfares, and we saw that the oil prices shot up, like very high, and there were new investment opportunities like meme investing booms like the NFTs, and we saw there was semiconductor shortage. There were upheavals in Hong Kong, issues between China and Taiwan, and there is switch to metaverse. So if you see the events, we were never quiet. The world was such a happening place actually during this pandemic. Even though we think that, like pandemic was a situation where everyone was at home, there are n number of happenings which has happened during this pandemic situation. So there was a lot of pessimism about the economic prospects, about the near term and the medium term. So, like there was also people were thinking that, like what's going to happen, because everyone was uncertain. And it was not only about the treasury of US bonds, it was the bond curve. It was also the other bond curves in the Europe and other markets as well. So what about the safety? What about, the risk factors? And all these factors that contributed a lot of events, okay, in the stock market. So we can see that with like usually a crashing can happen, like usual stock market, it's mostly wide accepted definition. When a stock market crashes like 10% or more in one day, but then Nasdaq and Dow Jones have actually crashed big time, and it was actually continuously for 4 days the market declined for 26%, 16 to 20%. 16th and to March 20th, it was a big decline, and approximately Dow Jones have gone down 6,400 Dow points actually. So the event was massive. Events, like events were many, and the effect was big. Okay, but then we can see that aftermath was something very, unimaginable. I also want to show you during this time there were major impact because of the pandemic as well. The first one I'm going to tell you about few, at least three or four major issues which we have seen during the pandemic. So first of all, it was a global supply chain issue. Now we know that the global supply chain, right now global productions are improving, but still there is massive employment shortage. Like in US alone, like 8,000 truck drivers are in shortage. Many people lost their job. There are not much of people at work. Even you have heard about this phenomena of great resignation, like people are leaving their job and people are not there for employment. Not much of people are there, and especially at the transportation, supply chain and logistics, there are massive employment shortage. And on the shipping container front, like we have around 17 million to 20 million shipping container, and out of that 11 out of 17 are idle in many of the ports around. Okay, causing severe delays. So around, and this has caused many delays in transportation, many delays in the delivery, and also it has cost the freight prices, that the transportation freight prices have increased dramatically. So you can see here how industrial production, with this chart, you can see how the industrial production has gone down and how it is slowly started recouping in the current months right now. But this has affected a severe damage onto the global supply chain. Now, when you have persistent supply bottlenecks, it can actually disrupt, because transportation is one of the most important factor in trade. And when it gets disrupted, what happens? The global activity, the trade, everything starts. And the most important, it is the inflation. So just because of this global supply chain issues have peaked, and it is still not being resolved, there are issues with inflation. Now we know that it is actually it is fueled by the shipping crisis. So here, many of the ships are, shipping containers are idle, and even though there are not much of transportation happening, oil price have gone up, and consumer products are expected to increase by 10%. So global inflation has increased so much. If you see this blue charts here, the blue bars, you can see here the median has went up during 2021 with 4.35. And this is actually the 4.35 is 4.6% median average on the inflation. We expect that it's going to go down, but to 3.8 and to other levels with all these, measures which the government is taking. But still the inflation is a real big problem, because the rebounding the global demand and activity started in mid 2020, but the supply disruptions can cause a really big damage, and it's still not resolved. And this has pushed the inflation to greater highs. And it's only not in US, it's not in, Middle East or in India or in Europe, it's all throughout the world. The core consumer price inflation, that is in food and energy and all of, even housing prices have increased. And then you can see that the prices of semiconductor manufacturers, the chips, all of this also have increased, and it has unfavorably impacted because of the shipping price. So here you can see it was 40-year high. So in addition to this, all these possibilities of new pandemic problems, all this risk is there. So inflation is a reality which we are going to deal with in the next coming few months. And we have to anchor this inflation expectations, like how we are going to do that. There should be proper policy actions. And this is what the government is doing right now, tightening the monetary policy with the central banks. The central banks are tightening the monetary policy by increasing the interest rates so that it can reduce the consumption, because when demand is greater than the supply, there will be shortage of products and the price goes up. And to the fundamental economics to work, so they are trying to reduce the demand, reduce the consumption, so that people will be pushed to save, people will be pushed to pay off their loans, and they will reduce their consumption, and in that way they can reduce this shortage and then come to an equilibrium price. So this is actually a main problem which we are facing, which we are facing right now. Now, in light of these events, investors, they also started understanding that this is actually a big problem. So they started preparing, and they have started setting up their expectation about what is going to come. So they started coming out with, like inflation protected securities. Like there are 18 ETFs with just inflation in their name or descriptions, which has all positive cash flows this year. So it's combined over 35 billion new cash in 2021. So this is something which investors are also understanding and trying to divert in terms of inflation. Now I'm going to talk about the next aspect, which is actually one of the closest problem to myself as well and to many of you, is the climate change reality. Now, this is actually something which everyone was ignoring. 2021, even though everyone was at home, sitting, your office was at house, your school was at your house, your university was no one was there outside, but still 2021 was the warmest year, one of the warmest year in the history. And in 2020, the World Economic Forum, they ranked the climate change as the biggest risk to any economy and society. So it's not about inflation, it's not about interest rate, it's not about not having food, it's not anything. The most biggest risk to an economy is the climate change. Now, when Greta Thunberg was talking about this, Mr. Trump made fun of her. Actually, he told she's talking foolishness. But this is actually a reality. We are seeing many floods. We are seeing tsunamis, and we are seeing many damages all throughout the world. And if you can look at these damages which are happening around the world, you can see here in this chart, 1970, 1980, and 1910 to 1919, it's increasing so drastically. It's, like the climate impact is so bad. But this actually bring down many of the GDPs as well. So you will be thinking how GDP can go down, okay? But because of the warming climate, because there are huge shift in the geography, demographics, and the climate. So what happens? There will be extreme weathers, and you will be, spending a lot of money on it, and there can be even negative long run. It can affect the property, the infrastructure. It can, reduce your productivity. There will be mass migration. There will be security threats. To name a few, all of these problems are there. That's why World Economic Forum told it's not anything else. The climate change is the biggest risk right now. And meanwhile, so where the long-term environmental impact of mask, glove, chemical disinfectants, all this we have used. We can see that all throughout the roads, everywhere you can see that, people have not taken care of it. They have littered the places with all of this. And you can see here, the impact is really bad. So in light of these events also, investors started, being very cautious, and they also started thinking about investing in very good, clean energy related stocks as well. So that's the biggest shift, which I'm going to talk about very soon. But the good news is that the pandemic actually accelerated global attention on the climate. So now the world leaders, that they joined together in Glasgow, and they started continuing to collaborate with the international efforts about the climate change. And many people did not know about, the impact of the environment. Now they are taking a lot of effort. They're spending billions of money to repair our Earth. Okay, so this is something which has happened positively. It has actually, accelerated the global attention on the climate change with COP26. And now I'm going to, so given this scenario with the context, I want to tell, so these were the major events. So that was our topic. I wanted to tell you about the major events since the pandemic. So I just, gave you an insight about what has happened before and what has happened after that, and what were the major events that has happened. Now I'm going to talk about the trends in the investment since Q4 2019 and how investor acted and reacted since the pandemic. So here I want to talk about the volatility and average returns. Now, this in general, the stock market, they mean S&P 500. So whenever we talk about stock market, we usually say about S&P 500. Now, this is, my dears, the volatility and the average returns of the S&P 500 during the pandemic. You can see here, the S&P 500 was down 4.4 in 1 year during a decade, only up to 2% or less in 1 year, and all the other time it was up more than 20% in 4 years and 12 to 19 in 4 years. So you can see here, the average annualized return was 14.8, and it was even more during the pandemic because everyone was trading, and they gained a lot with the increase in the stock price. So you can see the Qatar Stock Exchange as well, the Qatar Index. Okay, so you can see here the Qatar Index and the returns have increased plus 40%. Okay, the annualized return during the pandemic. So the overall average, I'm talking about the Qatar Exchange as well. So everywhere, actually people gained a lot during the pandemic. Whoever has bought shares during the March have become really rich with many of the moving stocks like the growth stocks and more momentum stock like the tech stocks. They actually gained a lot of money during this time. The average return has really increased. See, so for example, if you were a person and you were investing since the table will show you that it's 10 years, 30 years, and 50 years. So it shows about a decade change, like how it has moved. So if you were invested $1 in 1972, it would have been 46.69 today. That means, imagine keeping that money with you and you will spend it. It loses its value over a period of time. But imagine if you would have invested, you would have got more money. And this is why investment is very important. I have taken many webinars even before as well, why we need to invest. Even if you have a regular job, it's very important that you save and you invest. Okay, so it's very important. It's very, very important. And this give you a more motivation. It should give you more motivation that investing in the long run, it's always good. So if there is any one lesson I want to give you with all these classes is that, your investment behavior, that should be something like a habit to you, and you should keep on investing for a long term. You should not become an average day investor who is very speculative and, who try to make money. It's not like that. I'm asking you to invest for the long term. There is simply no reliable, accurate way to predict which years will be good, which years will be bad, but there will be surely, there will be really good annualized return, and that's what we have seen so far. Buy high quality stocks, ideally regularly across every market condition, and hold these stocks for many years. Okay, so be loyal to them, and they will be loyal to you with good stocks and good returns and earnings. And this shows that you can actually make your money work. So we can talk about how to pick up stocks, or I think there are many of the YouTube videos which you can see how to pick up good stocks, how to pick up good quality stocks using the fundamental analysis. Now, if you're looking to build wealth, invest in stock is an excellent place to start with. But to get the best returns in stock investing, you have to use very good strategies. Buy stocks, buy great stocks, and hold them for as long as possible. Okay, so this is the main strategy which I want to tell you. I'm not a person who is fond of short-term buying and selling, even though I do that a little bit. But I'm a big fan of keeping stocks for a long time. So you can actually buy these stocks, and you can see here the annualized return. If you put this money in your bank, or you keep it as cash with yourself, if you keep it as cash yourself in your savings account or current account, it's going to lose its value. Okay, and if you're going to keep it in a fixed deposit, it will not give you this much of a return. Same goes with any type of asset. So you need to have a mixed basket. You should invest in real estate. You should invest in gold, silver. You should put money in equity. You have to start investing. It's very, very important. So because I'm insisting on this, because many of my students are here, and when they hear, I want to motivate you to do that, right? Okay, now I'm going to talk to you about the stock market, how it performs. As I told you, it was huge performance. There were many best performing sectors in the past. And you can see here almost all the sectors, information technology, healthcare, utilities, all of them, like have gone really good. And especially, the banking and IT also have really done well during this, COVID period, the pandemic period. So this is the same with many countries as well, like it was the same, when we think about information technology, that's what we have used during the pandemic. We have used Zoom, we have used the Microsoft, we used Apple, we have used all of this so much during the pandemic than ever before. So that's why information technology stocks have gone well, and many other stocks as well, have done really well during the pandemic. Now, I'm going to talk about now the investor mindset. Okay, so seeing the pandemic situation, that the situation was, was bad in the beginning, that there was a recession, and then this pandemic happened, everyone was frightened. So I want to tell this about the investor mindset, the pre and the post pandemic, using the VIX chart. Okay, so this VIX chart is made by the Chicago Board Options Exchange Volatility. It's made by the Chicago Board Options Exchange, and this is called the Volatility Index. So this is called the VIX index, and it's one of the best metrics. Okay, you can write it down. It's one of the wonkish metrics that any investor can use to gauge what will be the stability of the next 30 days. So you can see here the VIX in the beginning, the pre-pandemic, was around 20 or lesser than that. And then it was, in the beginning of the pandemic, investors fixated on the virus, every move. So they poured over data on company lockdowns, vaccine advancement. There was a lot of panic. And you can see that the VIX index have gone up so much, to even to the 80s. When people get panicked, and if they are not sure about the upcoming days, the VIX index goes up. So that shows the investors panic, and there were many people who were panicked, and they were not worried about the company's strategical position on profits, and they were worried about who is going to win, who is going to go out. So all this has happened during the pandemic year one. And what happened after the pandemic? After the pandemic year one was the pandemic year two, since starting from January 2, and you can see that the VIX index have gone down. So when VIX index have gone down, okay, up to January 22nd, 2022, you can see here there's a slight increase than the pre-pandemic period, but it's still, like acceptable, because when Wall Street, made a comment that, the financial strategists can call this as an endemic rather than a pandemic. So it is something which, will come and go like other diseases. It's not a big thing. So that has calmed down a lot. And then, the Omicron variant was not that strong, and the vaccine was, most usually effective with people. The death rates, came down. So the effectiveness of whatever measures we were taking in terms of the COVID-19 pandemic was effective. We cannot tell it's 100% effective. So it has become an endemic rather than a pandemic. So now you can see here that there was a complete shift, okay, of the pandemic year two, when it has come down, okay, to even though there is volatility, but from a rough ride, it has actually become a relatively normal condition. So usually the VIX fluctuate between a low volatility of 10 to 20. That means it is occasional leap. It's like normal. So this, if you see here, the VIX index skyrocketed at the end of the March 2020, and then it became the record levels of 50 and then 80, and then it reached so much of peak. It was, since October 2008, this was a time when the VIX has gone bad, really, during the pandemic year one. But then you can see here, it came down and then settled at to 27.36 yesterday. So yesterday, 27.36 means, people are worried, but they are not, they are worried. And I will tell you why they are worried in the coming slides, but it's not about the pandemic. It's many other things. So these are the, the investor mindset since the pre and the post pandemic in terms of the stock market volatility. People are well off, people are used to it now. Now they see COVID as something manageable phenomenon. So they know that, like it's virus has become a really, really manageable thing. They're not worried about that. So this is the investor mindset now. People are not going to go back from investing in equity market. They are stronger. They are seeing for different types of option. They're only worried about, what the government is going to do, and that I will talk about in the coming slides. So second, we are going to think in terms of investor mindset, like what are the alternative investment? And I know that this is some interesting topic for many of you because like many of you have gone and invested in Bitcoins and, many other markets aspect. So stock market, when they started seeing heavier volatility in October, when the index has gone up, there was a fear of market volatility. People were thinking that there is a speculative equity bubble, like everything is, like highly, the intrinsic value is not good. The price has gone up. The P ratio, I still remember Tesla's P ratio was 1,600 at one point of time. I was amazed to see that. And like many of the stocks, the P ratio was huge. And these were all speculative equity bubble, and it was so sure that it's going to create some systematic market risk. So people started thinking, or they started thinking. That's why the second pandemic, is higher than the pre-pandemic. So even though they don't fear as like in the March and April of the pandemic year one, still you can see that the fear is a bit higher. So they fear the volatility and they fear the market volatility, and they want stable alternative assets. And this is what we are going to look at. So investors were looking at stable market, and they were looking at new markets and new types of investments as well. So this one, we can see there were many alternative assets which came up. I'm going to explain all of this, all these five of it, because it needs a lot of explanation and how they have moved. And we know that today 1 of 6 adults have now invested in cryptocurrency, and people started using NFT so much. And then people started having venture capital and 80% quarter-to-quarter increase in crowdfunding, and very big emphasis on ESG, the economic, social, and governance-based assets. So we can see that all these were driven by financial technology, because the blockchain was very effective in many of these assets, and it was even being developed. And about metaverse, which is being developed, and even NFTs and metaverse have a relationship as well. So the advancement of technology and financial tech, the fintech, was one of the major contributor for this thinking of alternative investment. Now, by 2025, it is expected that the alternative investment will go up to 17 trillion. So this is the expectation about about the alternative investment, and all of this is because of the fear of a little bit of volatility which is there in the market. Now let's see one by one. Like first, the cryptocurrencies. Many of my young students who are who started with finance or with business, they are very keen to do Bitcoins. I don't know, like now this is not the right time to enter. I have to tell you so many aspects which should be an eye opener for you. So first of all, if you are not aware what is a cryptocurrency, it's a decentralized digital currency which is packed and stored through a blockchain system. So the currency or a token grants a blockchain member specific network rights. So theoretically, there is no limits. Okay, so the network rights which blockchain can grant, they can usually use many types of token, like equity token, that's shares of token. They can use utility token, like for example, any types of specific services. You can use intrinsic tokens, like for example, this include Bitcoin, Ethereum, Litecoin, or altcoin. All of these are virtual currencies, which is not Bitcoin. Whenever think about cryptocurrency, we only have Bitcoin in our mind. And then there are asset-backed tokens as well. This is the easiest tokens to value because it has something behind, like gold, silver, real estate, or any other hard assets. So if you see here, during the pandemic period, the first lockdown effect, okay, there was a small bump. And after that, the first graph shows that it had a massive increase, Bitcoin, Ethereum. Then you have the Tether or the Binance coin or the USD coin, Cardano, Solana, exactly, so many cryptocurrencies, they started booming up big time, and nothing like Bitcoin. So it has gone up 211%. So currently there are more than 9,900 cryptocurrencies. Okay, and then new tokens are also popping up, and each they have using different what is it called, different levels of token as well. So here, if you see about the market capitalization, now it is 2.05 trillion. It's equal to the 8th largest economy globally. It's more than many of our big companies, okay, even bigger than Google or many of the companies like that. So Bitcoin's total, and within the market capitalization of the cryptocurrency, Bitcoin has the highest market cap, like 815 billion. And during 2012 to 2022, okay, around 195,500 times it has increased, 100% it has increased, and it reached all-time high of 68,543. Now it's around 40,000, like that. So it is 211. People were, like crazy about Bitcoin, and they were investing so much in Bitcoin. Now the average trade volume is 91 billion, and there were, like IPOs, there are ICOs, like initial crypto launch. There were 2,329 crypto launches that has happened, and apart from that, there are so many cryptos which are not launched, but behind the stage it is playing. There are 415 global cryptos, spot exchanges are there. And in S&P 500, Tesla is the only company who announced the acquisition. That's only because of Elon Musk. You know how weird he thinks. His ways of thinking are completely different from other CEOs. So he was the only one who bought Bitcoins as Tesla. Then if you think about BitPay, like if you can use this currency in the industry, you can gift cards and prepaid cards, they use it 26.3%, and consumer electronics is 1.7% acceptance is there. And if you look at the social media, every 2 seconds there is something about cryptocurrency. But one thing about cryptocurrency is that it has a big damage to the environment. Okay, it can actually cause big damage to the environment because it uses a lot of electricity. If you see in terms of how much consumption it has in terms of electricity, you will be amazed to see it. It actually can create increase in the temperature, global temperature by 2%, 2 degrees Celsius. Now this calls about, like what all rules it can come, what all regulatory taxes, or what all, different types of regulations can come on the Bitcoin. Now everything is free, and, everything is like, like it's not much regulated. So people think that it's right opportunity, but it's already high priced, and there can be many related regulations which can come in terms of cryptocurrency. So if you can see here, there is, I have put the IRA tax return from the US. They already started asking about how much of virtual currency you have, and this is what's going to happen with every country. So IRS think that this amount of mass, there is already a mass under-reporting, especially with the Bitcoin gains. And each country is different. 30 countries have already included in this type of rules and regulations. And, in Qatar, we don't accept any types of Bitcoin. So even if you do trading outside and you bring back your cryptocurrencies, Qatar will not allow you to, have it. So be very careful. And there are so many crypto theft as well. Okay, so you are going to become a trader, or you're going to invest in Bitcoin, or you're going to become a miner. Be very careful about the Bitcoin. So it's already hype, it's already boomed up, and you need to be very careful about buying a cryptocurrency. And there are at least 60%, as I read, that there are more than 1 billion worth crimes and crypto theft which has happened. So I have heard about one of the successful cryptocurrency named after the Squid Game. When the Squid Game came, they came out with a new cryptocurrency called the Squid. And when they released it, it was a big hype. People invested in it. and the people who brought this cryptocurrency took all the money and they left the scene. So this is something which is happening. You need to be extremely careful because it's very highly volatile market. The prices are already exorbitant with Ethereum and with Bitcoins and other cryptocurrencies. We don't know what it is because especially many of the Bitcoins does not have any asset backup. So if they fall, you lose your money. So be very careful with the Bitcoins. Now I'm going to talk about the NFTs. This is another new, funda which people are talking about. This is one of the most exciting trends to hit the cryptocurrency landscape. So in 2025, alone, the NFT sales hit a massive 25 billion. So NFT means non-fungible tokens. You can have your game, your own, whatever you have it as your own, you can actually sell it using the NFT trading platforms. Okay, so even there are silly things also which people are selling using the non-fungible tokens. So this is a more exciting trend. And in 2021 alone, there was a massive sales hit of $25 billion. And many people are purchasing, especially from video clips to cartoon monkeys, like maybe Dora clips. I don't know. Many funny things are happening here. So actually the art world has really benefited significantly from the rise of the NFTs. Many top brands, celebrities, influencers, they also started. Even, I was seeing about Trump's daughter, Ivanka. She also did some NFTs with the hat she has. So these are news. Many people are using this as a platform to trade or make money as influencers and get this money. So out of nowhere, demand for NFTs and tokens it has hit like anything. And here you actually purchase and they have digital identities. And these are people who like to collect or who like to sell arts or anything which has an original value. And this but the problem with NFT is that it says we are still figuring out how to use this NFT purchases correctly, because there are weird platforms. There are many types of opportunities which can be fake. There are a lot of uncertainties. There are a lot of loopholes right now with the regulations. We don't know what's going to come. So as interest in NFTs has increased in the last couple of years, we have seen various types of NFTs now. So you can even have games, a metaverse, and there are, these are all NFTs which are coming in value, but nothing like collectibles. So you can see in the graph, the collectibles have are the popular form of NFTs. Okay. Now, so this is something. Thousands of NFTs are happening, and this also has happened during the pandemic. So. So this is a trend which has started, and I know many of you are interested in it. So there are different platforms which you can check. If you have something, a piece of art, I will say this is something which you can start looking at and see whether if you have authentic work and art or anything collectibles. This is something you can explore, but be very careful about the NFTs. Now, the next one is another interesting development which has happened during the COVID time, the crowdfunding. So here, the crowdfunding is actually a practice of funding a project or a venture or raising money from a large number of people who can contribute little money for a cause. Okay, so this can be something like if you want to invest in your city, they can start a crowdfunding. And for example, here you can see a project called John Anthony Project. He is an Egyptologist, and he want to do more anything related to more Egyptology work. So for that, he is raising fund. Okay, so this is something, a new evolution, okay, which has started, not evolution which has started recently, but it's grown very well. It's shown 80% growth during the pandemic. And it was mainly also because by the financial technology, driven by the financial technology. I can show you here, I have also participated from 2019 towards the end of 2019 end with one of the crowdfunding, and he actually is a blogger, and he creates good sketches, and he simplifies the business ideas or business theories into simple things called sketch applications. So I have done a crowdfunding there as well, and I don't get a return for it. So there is no guarantee that investor will receive a return. The return which I get is that he plants 5 trees for me every year. Okay, every month, in fact, every month in many countries, many African countries, and I'm very happy about it. That's a return and it's not very expensive as well. So every year I have to subscribe. Every year I have to support him to, for him to work, to make blogs, and I'm contributing to that. And this is also a crowdfunding, and you can see my name in that. So like this, crowdfunding is also a big market. Now it's valued at $12.27 billion. And it's going to be forecasted in 2027 as with 11% compounded annual growth. So this is something a very good but risky business as well, because sometimes you cannot guarantee, you don't know the person. So if you want to do something like an investment and you know about that person, you are friendly or something like that, then you can go with it. But think about it in terms of as an investment opportunity. So I know it's not much developed in Qatar, for example. All these NFTs, Bitcoins, and crowdfunding are not much developed here, but in many parts of different countries. And this is also an investment opportunity because it gives you an annualized return of 10.2, but you need to look at who is asking you and what he does, what's the credibility, his background. All of this are very important. Now, and the last and the foremost is the environmental, social, and governance assets. Now, ESG assets. Now, I'm not going to separate it from the security assets. So ESG stands for environmental, social, and governance. And there is growing evidence that ESG factors, when a company focuses on ESG factors, and especially with this climate change and COP26 and the effort, ESG assets have very high value, very high importance. It's important to have ESG security in your portfolio. It's very important because it's not going to go down. This is somewhere, it's because everywhere, all throughout the world, this is the emphasis. There is a renewed interest in ESG. And this is seen it translated in terms of investment decisions. So especially in 2020 alone, there were 77% of wealth funds, insurers. There were many ETFs which came out, and there is no sign of slowing. You can see many of the ETFs like iShares and Vanguard, they are actually performing relatively well. And there are many stocks like Microsoft, Nvidia, and Salesforce, Cisco. All of these are also NSG stocks which are performing well. So interest in ESG has a very big influence on investment decision these days, because this is something we need. We want investment in clean, green, and renewable energy. And in Qatar also, in our stock exchange also, there are companies who do ESG reporting. And there is a growing strong interest in sustainable investing, new mindset, positive impact on the environment. And this is a wake-up call. This is like, the pandemic was actually good for ESG and climate change. And the retail investors started showing interest on sustainable investing. It's a very positive impact. If you are thinking about Bitcoin, forget about it. You are not contributing and you might lose money. You will lose money in cryptocurrency. You don't know about NFT. You don't know about who is there on the other side of crowdfunding. But you can be sure about the ESG assets. The intentions are clear. It is going to be $20 trillion in 2022. And Bloomberg has predicted and has promoted ESG ETFs very well. And there are the ESG ETFs are expanding for more than 38 straight months. So this is like a sustainable fund you can think about. If you have not, looked about ESG assets, please start looking at AAA for companies who have ESG assets and see where you can fund. Don't think that Tesla is a company with very good ESG. They are actually at the bottom of 10% of all ESG companies. Okay, so they use Russell FTSE Russell has actually ranked Tesla as among the one of the worst performers, last among the car makers on the ESG issues, especially after their Bitcoin purchase. Okay, now what is the investment outlook? Okay, so with all this information, I want to tell you about what it will be like. So we know right now with Omicron, okay, not many people are getting sick. or even if you're getting sick, it's manageable. So there is a projected vaccine coverage as well. If you look at the chart, it's growing. It's actually getting better than before. So be it an emerging market or an advanced market or a poor country, everywhere people are, like getting vaccinated. So even though people were focused on COVID, okay, during a pandemic and they're worried, they are not much now. People are not much worried about it because possible Omicron driven by global outcomes. If you see the graphs, are all World Bank predictions. You can see that the growth will be better this year and comparatively less, next year because of the inflation. So there are generally lockdowns are avoided. Almost all the companies are up and running. There are some problems with, other problems are there, which I'm going to explain, like supply chain challenges. Now, this is actually something which is going to disrupt the key industries. There can be upward pressure because of this on the prices, and people can lose money, okay, because of this, and the wage gains. All of this, are problems, and shipping disruptions are the main cause of the supply chain challenges. So that's one thing. And then unanchored inflation, because inflation, we saw that many countries are facing very high inflation, and this is not going to go down any soon. It's going to go up. So this is actually a very lasting effect. Year on year, inflation is a bit high. And because the inflation is high, central bank will continue to tighten the monetary rate. So interest rates are going to go up. So that already people are thinking about what's going to happen with the US if when Powell is going to when Powell declared that they're going to do small changes in the interest rate in the coming months. People are expecting at least 7 changes in the coming months, 7 interest rate changes. And people are scared of the possible damage it can have on the economy. And that's why right now markets were crashing, the NASDAQ or any other market. So this is something which we need to look at, how the fiscal and monetary policies are. And there are low probability that, and this is going to follow with other countries as well. If you look at UK or Brazil, or many countries are following with the tightening of fiscal and monetary policies. And debt crisis, there is low probability because some of the countries, they have funded so much for their corporates, and now they have debt crisis. So there will be debt crisis which is of low probability in the coming years. And we know about the geopolitical tensions which we are facing right now. We are seeing the war, which can be imminent, or which may not happen as well. Okay, and that is also creating an unsettled market actually. And then large climate change commitments. So every country has to spend a lot on the infrastructure that also can increase the commodity price volatility. And there may be many commitments on the infrastructure where these countries have made in the COP26, a lot of investment. So given all these situations, the global recovery is set to decelerate. Okay, so even though COVID-19 is controlled, there are many challenging situations. So the outlook is actually clouded by various downside risks. So we are not much worried about the new. We are, but we are not that much. Okay, various variants of COVID-19. So actually, the inflation expectation and the financial stress of the economy can be more widening. So if you ask me what is the investment trends, it is like this. Exactly like how the people are, surfing on a high tide. So it can be very volatile with uncertainties. And Forbes advisor says that it's wait and see. But it's a earnings season. Okay, many of the corporates are declaring their earnings for the Q4 and the end of the year. So there will be some positives. But there will be wild swings in cryptocurrencies. We can see that there is many regulations and rules, frauds, and many things are happening with the cryptocurrencies. There are increased growth in NFTs, crowdfunding, and ESG can gain more prominence. So this is going to be the investment trend. So given the situation, what you have to do. So I'm going to conclude with a good real story which has actually happened. So I think most of you know about the Californian gold rush. So it was, one point of time, a guy named James Marshall. Okay, so he was working with Sutter's mill. So they were making a mill factory there, the mill there. So what happened is that when he was washing his pixel, he found gold in the river, okay, in the place. And the news of the gold spread. He asked as a owner, like, did you see this? What is it? And they confirmed that it is gold. And this news has spread. It is him. It is his picture there. And what has happened was that people started rushing to the California to make money. So around 300,000 people from United States and abroad came to California to just mine the gold because the news spread very fast. So everyone wanted to make money. So miners actually came and extracted more than 750,000 pounds gold during the Californian rush. And what happened? So this actually, it has stimulated the economies around the world as well. There were, like many people, from the different countries as well. They also came, and there was a big rush. Okay, big rush with making money from gold. Okay, so what happened overnight? California became an international reputation, got an international reputation as a golden state. So California became popular. Some people made so much of money, and what happened? You might be thinking like they all made, whoever went there made money. But the question is, who became rich in the gold rush? You might be thinking that people who went there, all these 300,000 people who went there, who actually digged, who mined, they actually got the money. So I will tell you, they were not the ones who made the wisest decision during that gold rush. It was the people who never went to the gold mine. Okay, so there were few men and women, they never went to the gold mine but used this big event as an opportunity. So these were the merchants. So the merchants, what did they do? When everyone flocked to the gold mine, they found an opportunity to sell the things which the miners need at a very exorbitant price, that is 50 times more to these people. So they started selling products like, for example, shipping, entertainment, lodging, transportation, shovels, and all of this. So there were few people who became really rich, and you will be surprised to hear about these people who made money during this gold rush as merchants. You might be knowing these companies. The armor company, the Philip Armor, he actually started with giving meat to the meat and food to the people who were going there to mine. And then ultimately he found a meat packing factory in Chicago. And till now, the armor food packing is very famous in the US, and they are making so much of money. They started it at that time. And we know about Levi Strauss. Levi Strauss is also, he started, making clothes for the people who were mining just because they need rugged clothes. So he started stitching jeans, and he made money as well. And then we know about Wells and Fargo. The two people, they started giving, help for the miners. And this is Wells Fargo Bank, which is very famous in the US. And there is Studebaker, automobiles. They were the ones who were giving wheelbarrows to the miners. So this is actually a very good lesson. Okay, like when there is an event, when everyone goes and try to make money, it is someone else who actually look at the opportunity and see where they can invest. They become actually rich. So this is an event here as well. Here, if we see about pandemic, okay, let us connect it here to the Californian gold rush. So actually the winners were the ones who actually built the supply chain for the demand of the miners. So regardless of who got the gold or who haven't got the gold, who sold, who let it be anyone. Okay, some of them got the gold, some of them haven't got the gold, but to all of them, these merchants could sell the products. And this is a phenomenon called second order thinking. They are not the ones who go behind the herd mentality. They are the ones who look at what's going to happen because of this. And this is called pick and shovel strategy in stock market. And pick and shovel strategy came from this Californian gold rush. Okay, so when people have the herd mentality to do what everyone does, these people step back and think about the opportunity. Opportunity is because of the existence of the herd mentality. So the same thing, when gold rush happens, majority of the people go for gold. And this came from legend Warren Buffett himself. When automobile revolution started, there were 2,000 companies, and at the end of the century, only 3 companies were left. But who made the money? Regardless of the success and failure of all the automobile companies, it was the spare part manufacturers, companies who constructed the factories, factories for the automobiles, oil company like that. So pick and shovel strategy means you don't look at the herd mentality like Bitcoin. Just we jump to Bitcoin, just jump to NFTs, jumping to new things. You watch out for the strategic investment. Why they are becoming bigger? Why? What is the opportunity behind it? Okay, so for example, with coronavirus, for example, the pick and shovel can be like when vaccines were playing. You need to look at the vaccine making company. Okay, that is good, but at the same time you need to look at the the apparatus or the companies which actually help these companies to make the vaccines, like Sartorius or Honeywell or Corning or Thermo Fisher. They supply the laboratory equipments or many things which can help the vaccine companies to produce the vaccine. So these are called the pick and shovel investing. It's not actually risk free. So this is actually watch out for strategic investment. So if you see, this is the era of COP26. We have seen green energy. We have seen ESG assets. And you look at, okay, what are the green renewable energy? Read the news. Read about every single emerging player in the market. See who is contributing. Who are the forefront players? And for the forefront players, who are the supporters and the partners? For example, who provides the infrastructure? Who provides finance, like chip companies, banks? Who is there in the entities in the value chain, and then decide. So diversify and invest in different companies of type 2 and 3 and 4, like supporters. Keep on the eye on the market and see where the trajectory is being developed. See the interest rate changes, see the policy changes, know where your money and act wisely. So this is all I want to tell you, the evolution of green energy investment, apart from all the other investment trends which I have just mentioned. So thanks for listening. So we will spend some time taking questions.
Thank you very much, Dr. Anu, for this informative and knowledgeable presentation. I really learned a lot from this presentation. It was very interesting as well.
Thank you.
So before going to the questions, I would like to touched based on these new trends of investment, and as you see, people now are shifting their investments towards I would say creative assets, intangible assets, virtual, like the cryptocurrencies, the NFTs. And even, I know some people who are now saying that we are buying lands on the metaverse, which are virtual lands. Do you think that these investments will pay off in the future, or it's just, investments that indicates that people are having now so much money, extra money, that make them more risk appetite, and just spending this money? Also, do you think that this money or this extra money was due to the massive bailouts that happened in the last 10 or 15 years, when the financial crisis happened 2008, and then we say that we had like a free money decade, no interest rates, or even sometimes you have negative interest rates in Germany, you have almost zero interest rates in the US, and so on. So do you think that now, this announcement from the Fed and even the European Central Bank and so on, that there might be an increase in the interest rate, do you think that this might, curb this kind of investments, or control it a little bit, or this is the future and we have to accept it?
Yeah, I will answer it one by one. First of all, okay, when we talk about these assets, how much it is regulated, who is controlling it, right? So technology is like a fire, like you can use it for cooking, but at the same time it can burn you as well. So all these are after effects, okay, of technology. It can be made, it can be used in a good way, it can use in a bad way as well. When we talk about NFTs, for example, all these collectibles and everything, people are still discussing whether it should be made as an intangible asset or it should be made as something like an investment, like an invested tangible asset backed up with some assets, like, for example, a real property or whatever it is. And we are talking about metaverse. You know, uh, Mark Zuckerberg himself told metaverse will take 10 years. Okay, it will take at least 10 years. Everybody is doing R&D on that. So how much time it will take? And then the regulations are not yet completed. There are still, discussions about where this is going to go or how it's going to be evaluated. And, whether, because if you lose something, there is no protection, there is no security there. So it can be just like a trial and then you enter. Even Bitcoin, even though it started in 2015, okay, there were a lot of probings which was there in the initial websites. I don't remember that platform. It's something called Coin. So they had a lot of probing about inappropriate or like not disclosing all the results and not having transparency on the transaction. So this has to happen. They have to go through this process, the regulatory security evaluation. So that is not clear. So till that time, this investment can be a hype, like how the YouTubers are making money. People can, it can be a big hype. You can invest there, not a problem, but there is no security in that. And that is why. And even, Tesla itself, they actually got 10 billion from the as a subsidy from clean energy, and they use that to invest in the Bitcoin, right? So these are questions. So the genuinity is always a question, even though they say that it's all safe and secure with the blockchain, security wise, safety wise, regulation wise, it's still a question. And in terms of interest rates, so we saw that Powell has already declared about the interest rate changes that's going to happen from March beginning onwards, and it's going to happen 7 times in a year, 4 to 7 times. That's what he said, and this is going to be the same because interest rate has not changed or increased. Like since the global recession, this is actually like the first big initiative to change it. So it's going to happen with all the European countries because if inflation is going to go up, if inflation is going up with every country, it's a very useful tool, monetary tool, to adopt interest rate increase to curb the inflation. And if inflation is not controlled, it can damage the whole economy. It can actually create a lot of unemployment. It can create lack of consumption. It can become really bad. So it has to curb. So for sure, there will be really great moves from all the central banks around the world.
Thank you very much, Dr. Anu. Okay, so let's have the questions that we have now on the Q&A section. We have the first question came from an anonymous attendee. He or she says, I haven't seen any mention of productivity. If growth is driven, let me make it live, this one. Yeah. Driven by increased productivity, do you believe productivity is higher now than pre-COVID times? If not, what is the implication for equity prices taking into account productivity and a rising rate environment? Rising, maybe he means interest rate environment.
So productivity has had a big implication because of, one of the factors is like when industrial productivity, actually industrial output I have already mentioned, industrial production and output I have already mentioned in one of the slides, and I have mentioned about the productivity. So after the dip in March, it has actually improved. It is increasing, but the biggest impediment is the global supply chain. So imagine you have production, you have productivity happening, but whatever you have produced is not reaching to the end customer. So that's actually always a problem. So yeah, it's increasing, especially with technology, it's improving, slowly recouping. It's not like before, like the first pandemic year, it's improving, but it's a problem. Yeah.
Okay, so we have 2 questions from Maram Shahal. The first, she says, Dr. Anu, I've been very hesitant about investing or buying Bitcoins. Do you have any recommendations for first steps and first time investing? The second question, do you suggest AAA companies in ESG? I would say something that we cannot give any direct recommendation
Yes, we cannot
in
give any
our
recommendation.
webinars regarding any of the assets. I mean, whether they are Qatari or international securities. But yani, you can give like general advices, doctor.
Yeah, Bitcoin is not an asset which I am fond of. Okay, I have told you about why I'm not fond of or why there are problems in that. First of all, the Bitcoin price is very high. You should not enter into a market like this. There are high chances that you will lose all your money. So don't think about investing in Bitcoin. Second, Bitcoin is banned here. We cannot trade in Bitcoin here in Qatar. So even if you invest in Bitcoin anywhere else, you cannot bring back the money to Qatar. So immediately they will ask for sources. And if they find out it's from Bitcoin, then you will lose all your money. So don't go for that, madam.
Okay.
And about AAA
companies
companies,
in
yes,
ESG?
I have actually listed some of the global stocks like Microsoft, Nevada, Salesforce, like that. Those are companies. You can just Google it. You can get those kind of stocks.
Okay.
Yeah.
By the way, for the ESG companies, we have also recently launched an index with the MSCI. We call it MSCI ESG Index, and it is on Bloomberg now, but very soon we will have it on our website. And if you go, and get the details of this index, you find the constituents, and you will find what are the companies that are compatible with the ESG initiatives. Also, we have on the ESG section on our website a platform for companies to report their achievements in ESG. So you can also, take a look at this platform to know what are, the results for our companies on the ESG front. Shoba Mariam is having two questions. She say, I really appreciate your valuable session. I have two questions. How does the consumer price inflation going to affect Qatari market? As you said, about increasing PE ratios of many companies in the stocks, which means companies will give a better earnings. Any specific companies here in Qatar? Maybe she means that investors are expecting, this PE ratios high, yes. They are expecting that earnings will become better in the future.
Yeah.
Any specific here companies here in Qatar? This is the first question. And the second one about increasing number of traders, especially in India during this pandemic, which will affect the stock trading positively, or question mark. And then she says, thanks again for, introducing these assets and the information as a whole. The session was excellent and super informative.
Thank you, Shobha. So to answer your question, first of all, about inflation in Qatar. So there was a news sometime back, I think 1 month back, not 1 month back, like in December, that Qatar has the lowest inflation in the world. It was around 2 point. So the average inflation is 2%, 2.4, 2.5 also Qatar's inflation. So comparatively, our inflation is way better than many companies. So consumer price inflation right now, it's not going to have a big implication on the Qatari market because inflation is benign right now. It's desirable and a lot of activities are happening because of FIFA. So it's not going to have a big impact in terms of inflation. So production, activities, everything, the economy is in full swing actually. So not much of impact in terms of Qatari market. Now, in terms of PE ratio, like when PE ratio is high, usually S&P 500 says it should be, say, like 20%, 15-20%. Now, especially during the pandemic, it has become 30%, 30 times like that. It's still fine. But PE ratio, when it is high, it gives you two messages. Like first, the most important is that the price is that many times bigger than the earnings. Second, the investors have very high hopes about that ratio, about that company. So that's why I told about Tesla, because Tesla is coming up with SpaceX and they have a lot of plans with the gigafactories and increased volume of cars. That's why the PE ratio. So everyone thinks that Tesla is going to do a very big, they are doing it. They are coming out with, the space link is going to come, and it's going to be a very big, exponential growth in terms of satellite and communication. So people are expecting a lot from Tesla. That's why I told that the PE ratio is very high. So in terms of Qatar, I cannot tell or suggest any specific companies, but you can look for companies and see their PE ratio, the ideal PE ratio. So if you're looking at fundamental analysis, it should be a benign, it should have a good intrinsic value. So good intrinsic value means when PE ratio is lower, that means, which is acceptable in the industry, that means it's not overpriced, it is underpriced, and you can buy those those stocks. And yes, about increasing number of traders, it will not affect, because retail traders, they are not trading in big quantities, or so it will only keep on happening. It's not going to go out. People are going to get more and more educated, and people are going to come into picture. So it's not going to affect in India as well.
Okay, thank you very much, Dr. And last question from an anonymous attendee. He or she says, could you please define stagflation? Is it even possible?
Stagflation means when inflation and unemployment happens together. Okay, that's called stagflation. So this can happen. It can be a situation, but in the near future, if you ask me that it's even possible, some people say, some of the economists says that, even before reaching into that stage, the central bank will intervene, take some action. They will not let loose and make stagflation happen. So this is a situation. This is actually a theory and a practical situation. It is actually possible. If inflation is not controlled, it can go into stagflation plus unemployment. There are slight tendencies of stagflation plus unemployment right now. In the US, if you look at the labor market, there is unemployment plus stagflation. It's slight a tendency of stagflation.
Okay, thank you very much, Dr. Ano. I would like to thank you on behalf of the attendees. I believe it was super informative and very interesting. And I will, of course, we are recording this one, and we will have it on our YouTube channel, inshallah. And also for those that couldn't attend for any reason and registered, I will share the link of the record on Zoom via email, maybe by tomorrow. And also I will send out the certificate of attendance by the maximum next week. I would like to thank you, Dr. Anu. Thank everyone who attended and joined our webinar today. Please don't forget the survey. And Dr. Anu, do you have any final
Thank
comments?
you so much, Samar, for thinking about me and giving me an opportunity to talk in Qatar Stock Exchange again. It was a wonderful opportunity. I'm so happy that every time you give me this opportunity to talk, and it's actually a very good exposure for me as well, and I could see many of my students here, and I'm very happy about motivated me a lot. So yeah, thank you so much. Thank you, Qatar Stock Exchange. Thank you, Sama, specifically.
We actually thank you, Dr. Anu. This one was one of the most wonderful webinars that I even learned a lot from this presentation today. The survey will just pop up to you when I close the webinar. You will have a pop-up screen with the survey for those who are asking about the survey. Okay, thank you, and see you, inshallah.
Thank you, everyone. Thank you so much.
Thank you. Bye-bye.